Hey guys, welcome back to the channel. In this video, I'm going to share a new satellite holding I invested into and why, as well as explain some thoughts regarding building a balanced portfolio. As always, don't forget to smash that like button and share this video if you like this type of content so the algo gods know that I'm here, and hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, a quick disclaimer, none of this is financial advice. You should always consult a licensed professional. With that out of the way, guys, let's hop into the video. All right, so first we're going to take a step down memory lane back to April 17th, 2025. I published this video, why I invested into the YieldMax Semiconductor Option Income ETF CHIPY. All right, for those who don't know, CHIPY is a ETF that holds a basket of US-based companies, right? US-based semiconductor companies, and I like that. There was no product on the market at that time, and I believe as of this moment, there still is no product on the market like CHIPY. All right, you're going to get some type of income or distributions on top of exposure to the semiconductor space. So I think that is a really good, product, especially if you're an income focused investor, but more so because if you want to take advantage of the AI thesis, getting some exposure to, everything that's going to be coming over these next 4 years, this AI industrial revolution, then having exposure to the semiconductor space is going to be extremely important, in my opinion, of course. So when I invested into this initially, this was when all the tariff stuff was going on, the back and forth. I wanted to have exposure to only US-based semiconductor companies, right? This does hold pretty much a decent basket of them, but it also holds a couple other ones like ASML, you have NXP, those are from the Netherlands, and you also have Taiwan Semiconductor, of course, from Taiwan. Now, those three companies, in my opinion, more or less follow the beaten drum of the United States. So I'm not, upset that they would include something like that in this ETF. But I wanted to move, or I ended up moving away from CHIPY. And it wasn't because the fund is bad or anything. I just didn't want capped upside for my portfolio. And I ended up moving the money into HOOW. I wanted to find some way to get back into the semiconductor space. The timing was kind of just off. I was putting a lot of money into different holdings. So now here we are today. So I ended up investing into the VanEck Semiconductor ETF. All right. This is SMH. All right. So SMH has a basket of US listed semiconductors. All right. And they include about 25 companies in this ETF. All right. So why would you choose SMH? Well, very highly liquid companies. These are some of the best in class. You have index that seeks to track the most liquid companies in the industry based on the market cap and trading volume. Again, that's really good. They're not going to really have any of those small cap, semiconductor companies. These are all going to be industry leaders. And then not only that, of course, you're going to get that global scope. So they include in their holdings, those three listed companies, NXP, ASML, and TSM. And these are three very important companies for the semiconductor sector. So I decided to hop back into, the semiconductor, space by investing into SMH. And here is my current position. All right. I put about $45,000 into SMH. Of course, we had the tariff sell-off on Friday. So this ETF is down quite a bit. And, just to manage expectations, I know that I am buying at very all-time highs. I mean, this is obvious. But this is going to be an ETF that I plan to continue to add to, right? I'm not going to keep it as a core holding. This is not a core holding because it is a thematic ETF. All right. This more or less, you guys know I follow the core satellite approach for my portfolio, but this is more or less going to be a satellite position. All right. This is going to be one of these guys. All right. And you can use any definition you want. I don't care what your definition is for satellite holdings or core holdings. I follow something like I want NAV appreciation or share price appreciation, right? It's a growth asset. It's going to be a medium to long-term holding. So if this AI thesis continues to play out over the next couple of years, over the next 3 to 5 years, then I definitely want something like SMH in my portfolio. All right. So those are just my thoughts. Now, building a balanced portfolio, I think it is prudent for investors to include it in their portfolios, especially if they're doing a lot of high income. While the high income stuff is great for dopamine hits, and you are building some type of alternate streams of income, I think it would still be a wise move to include some type of growth assets in a person's portfolio. So this is the advice that I'm following. I'm following that I need to have some type of growth because I don't want to rely just on, the income producing assets, right? The income ETFs. So just my thoughts. So I just wanted to manage those expectations. I know, again, this is at all-time highs. I do plan to add to this position as time goes on, or as I see, dramatic pullbacks like we did see in, July of 2024. And then, again, in April, right? That was a tough time for anyone in anything SMH related. So, going down, what are the holdings? I know a lot of people are probably going to ask what the holdings are. So let's take a look. So I highlighted the holdings that are, outside of the United States in orange. The rest are all from the United States, right? We have Nvidia, and you guys know I'm a big fan of Nvidia, very bullish on the stock, very bullish on Broadcom, AMD, not so much Intel, but hey, whatever. They got to include it in there. Micron. You also have Applied Materials, Lam Research. You have a ton of good semiconductor companies in here. And of course, you have Taiwan Semiconductor. You have ASML. They own the entire lithography market. ASML is a great, great company in my opinion, right? So anyways, you have all of these other, some of these other ones I've never even heard of. I've heard of ON, not familiar with Skyworks or Qorvo or Universal Display Corp. We do know who Cadence is. We do know who Synopsys is. While these aren't directly, semiconductor hardware companies, these are more so software-based companies, right? They produce software that helps chip designers, companies like Taiwan Semiconductor or even companies like in China. So I do like the basket that SMH holds. And again, I do plan to hold this ETF for probably a long time. I'm not sure exactly what my hold period will be. It'll probably be, at least a couple of years. I hope to at least hold this for a couple of years. Okay. So let's listen in on Jensen Huang, who had a great interview with CNBC's, investing club. And this is what gets me really bullish on the semiconductor space. So he's going to talk a little bit about the American stack and what his thoughts are on, the way forward for basically American AI dominance in the world. So let's listen in.
How to do that? How to ensure that American companies have all the best Nvidia technology and the best chip technology on the one hand. On the other hand, understanding that in order to succeed at AI, we really want the world to build on the American tech stack. Just as we want the world to be built on the American dollar, we would like the world to be built on the American tech stack, including developers in China. And so this is that balance of how do we ensure that American companies get the best technology on the one hand, but also on the other hand, provide the technology to Chinese companies so that China could be built on American technologies. And this finesse, this nuance, is a delicate balance, and this is where policymakers will have to wrestle with some of this. And I hope that we find a good place. A complete ban is not good for American companies long term.
All right, so basically, Jensen Huang is talking about, this AI stack, right? This American AI stack. You've heard Sam Altman talk about it. You've heard Lisa Tu talk about it. There is just so much going for this AI space. And my thesis for semiconductors specifically, because they are a derivative of the artificial intelligence stack, right? You have the AI software. Underneath that, you're going to have the hardware. You're going to have the networking equipment. You're going to have the semiconductors, the chips, the GPUs, the servers, something like from SMCI, Supermicro. And then below that, you're going to have the cabling, right? A lot of copper is used in that. And then even below that, you're going to have power, right? You're going to have gigawatts of power. If you look in that space, it's probably nuclear power of some sort, right? But my idea, or at least my thesis for the semiconductor space, is that AI is the new gold rush, right? You've heard this across probably a lot of these investing videos, but AI is the new gold rush, and semiconductors are the shovels and picks for this space. All right. Not only that, there's a huge spending war going on between the hyperscalers, companies like Amazon, Google, Microsoft, and OpenAI. Everyone is spending like crazy, hundreds of billions of dollars. All right. And semiconductors will benefit from this. Companies like AMD, Broadcom, Nvidia, Taiwan Semiconductor, ASML, just to name a few. And any new autonomous bot or data center that comes online, or even an autonomous car, is going to need semiconductor chips. All right, so that is kind of my thesis of why I want to have some type of exposure to the semiconductor space. Again, the way I'm doing it is by investing into SMH, all right, which is, again, the VanEck Semiconductor ETF. So anyways, guys, I hope you enjoyed this video. Hope you got a little value from it. Hope you got a little education from it. Outside of that, hope you enjoy your day. Take care wherever you are in the world. I will see you guys in the next video. Peace.